Hello and welcome to Citrus Mortgage Bites from our offices in Sevenoaks. For those of you familiar with Citrus Bites, Citrus Mortgage Bites is dedicated to all things mortgages. It's going to be a more regular publication. I'm going to welcome Holly, our mortgage and protection advisor, and we're going to tackle some of the most prominent issues that are being talked about in the mortgage and housing market. So we're only a couple of weeks into the year, and there's already been a lot of commentary about what's going on with the housing market, what's going on with mortgage pricing, and what's going on with the Bank of England pricing. So what better time than to introduce Holly. Holly, thank you so much for joining us.
Hello.
First question for you then, because as always, there seems to be an awful lot of noise. So we are only a couple of weeks into the year, possibly a little bit early for that spring home buying season that should be kicking off soon. But I guess let's start with, what are you seeing through the first couple of weeks of the year?
We've had a cracking start to the year, to be honest. I mean, I logged back in on the 2nd of January, expecting a nice, easy slide into the new year. Didn't happen, did it? Which is fine, which is brilliant. So yeah, basically came back and everybody's got a bit competitive whilst we all had a little Christmas break, which was fabulous. Some big rate drops, kind of up to 0.8% rate drops, literally from one day to the next, which, if we're looking to tie back in and get a new deal, is just great for our clients and anybody who is obviously coming off their fixed rate anytime soon, really.
Fantastic. And because I appreciate, I think the last video I did talked about the scale of the clients coming off of a fixed rate product during this year. What about when it comes to things like home buying? What sort of activity have you seen there in the first couple of the weeks?
Yeah, we've had some drops in rates there too. And we've had a few people coming in and kind of going, actually, can you help us with this? Can we look at this? We've had some first time buyers coming through the door as well, kind of going, don't know what sort of Christmas presents they got. There must have been good ones if they're currently going, oh, I've got a nice deposit now. And, actually, things are moving. Is it mad mental busy? No, not particularly on the home buyer side of things, but it's definitely moving along and ticking along, and we're not seeing any kind of like massive price reductions or massive price increases, so it's kind of holding its own, which is really, really nice to see a little bit of stability in some part of the business at the moment, for people to kind of start to get on board with maybe having a spring clean. Might be a bit early, but having a spring clean, get the house ready to go on the market, or as you say, cleaning up your finances a little bit and getting ready to actually start to look in the next maybe month or so, or even sooner.
Okay, encouraging signs for me that from what you've said based on the residential market. What about the buy-to-let market? Because from what I heard, that was a space that really struggled through last year. In fact, I think one of the reports I had saw research from UK Finance suggests investors are increasingly staying away from the residential property market, with buy-to-let purchase lending projected to fall by 8 billion or 53% actually for last year. So how's buy-to-let?
Yeah, buy-to-let is still struggling a little. So it has had, it has had a bit of resurgence. It's improved a little. I looked at some things kind of 12 months ago for clients, and we've checked back in again now, and things are either where they need to be or closer, a lot closer than where they were. I think there was a whole heap of landlords who understandably kind of went, actually, maybe it's my time to sell now, which has helped with what we were just talking about on the residential side, because obviously if there's more property coming on the market, first time buyers, home movers will have more choice to be able to look through, which is always a nice thing. But I think it is improving. It is getting there. I do get regular email updates from lenders about the stress testing getting better, the interest rates dropping slightly. It's just a much slower recovery than the residential side of things, but it's working on it. It is working on it.
Okay, thank you. And I guess a topic that we love is house prices. So lots and lots of debate last year, as always, about house prices. I think I've referenced this before as well, but I was reading a couple of different articles. One was from Zoopla that I think was referencing in November. Here we are, sellers accepted an average discount of £18,000 on their property sale in November 2023, the highest average price cut in 5 years, which of course is interesting because the wording is quite carefully. It's an £18,000 accepted an average discount, which depends, I guess, what it was on the market for in the first place and how high that was. I also read the Nationwide House Price Index. Other house price indices are available. This particular one I read was from the Nationwide, saying that in November, so the same month, UK house prices rose 0.2%, 0.2% month on month. I sort of sit there going, okay, sounds interesting. Up, down, not sure. So any views on house prices? What's going on with house prices?
Oh, yes, the big question. I think both are potentially right in certain, parts of the world and certain types of property. I think very much it depends on what you're buying and where you're buying it as to whether you're going to see a price drop, a price hold, or a price increase, to be honest. Certain properties are really struggling, cost of living, gas, electric prices, large houses, they are always going to be more expensive to run, for example. So certain property types are kind of struggling a little bit more. But as you said, it also depends what they were put on for in the first place. If what they were put on for wasn't realistic to start off with, you are going to see a discounted price. So it very much links into the estate agents, how well they know their area, what area you're buying in, because some places will hold their value better than others, and what type of property you're buying as well. So I think they're probably both right in some degree, and they're probably both wrong in some degree as well.
Excellent. And you and I are going to go head to head on this one with properties in a minute. So I'm going to tell you a bit about that in a sec. Just before I do that, though, one of the things, my final question for you for this particular episode, one of the things that happened last year with the cost of living crisis was obviously a situation where, lenders were forced to review the kind of underwriting criteria they were using in order to keep the market flowing. So what are you now seeing in terms of lender appetite, in terms of their underwriting?
Yeah, they are still having to be a bit creative in the fact that they have opened up their books, some of them to things that they probably wouldn't have considered before, or things that maybe they hadn't got round to kind of releasing or sorting out before, like landlord concessionary deposits or 5.5 income over a certain income level. There are things that I think maybe they've had in the pipeline and they've given a good shuffle to get that going in order to help with the fact that obviously rates haven't been as appealing as they have been in the past. And that affordability was proving to be a bit difficult. So they are still doing that. We still get regular criteria updates. I still in contact with my business development managers from all of our lenders on a weekly basis, catch up, have a check-in, read the emails, and just try and keep on top of what's happening and what's moving, because more often than not these days, it's not just about chasing the best rate. It's actually finding out who is the best lender for that client sat in front of me based on their circumstances. Because let's be honest, nothing's simple these days. Everybody has their thing that they need to get over in order to be able to do what they need to do. And that's exactly what, your broker is there to do for you, basically.
Super. Thank you very much. So I'm going to come on to the final part for today. This is a regular feature that's been set by our producer, Simon. So Simon's tasked Holly and I both to go away and investigate for our new activity, which is called, which I've labeled Bricks and Mortar Bingo. So Simon's tasked us to go away and come up with what we would buy based on what's available on the market. The brief for this particular episode was properties up to 350,000, and we'll see whether Holly and I have a match in the property that we've selected. So Holly, I will let you go first. What did you pick? What property would you buy from those on the market up to 350,000?
So I think it was 350, first time buyer with commutability, wasn't it? Our full brief. So I went with a 3-bedroom house in Polegate. So more my end of the world than yours, Richard, but not a million miles away. But I am that little bit further south than you are, because it had good commutability to Brighton, Tunbridge Wells, London. Little bit far for London, but even so, it had a dining room that you could technically use as a home office, because let's be honest, who commutes 5 days a week these days? Not as many people as did before. Good kind of family home. Probably got enough room there to start a family. Nice garden. Worked for me. Needed a little bit of work, but nothing that you couldn't put your own stamp on. Who wants something totally polished anyway? Not me.
I am glad to know that we are so different. So I read recently, I think it was Rightmove that had labelled Richmond, I think as they called it, the Happy at Home Index, revealed that Richmond upon Thames came number 1. Well, actually, Richmond may be fantastic, but I think there are some brilliant places in Kent, and I picked Tunbridge Wells. Because you're right, being a London boy, commutability to London. I found a lovely flat in Tunbridge Wells. It's light, it's bright, the views are fantastic, has an allocated parking space, and it's only 0.4 miles to the station. Gives me enough time to make a hot drink, walk to the station, save on car parking, save on coffee. And there we go. And two bedrooms I thought was quite important because, you know, friends to stay or an office or whatever it might be. So there we go. Our difference of opinion for this week, both very interesting properties in their own right, though. Holly, thank you very much. Short and sharp for this one. So appreciate your insights. Thank you, and look forward to seeing you on our next episode, which will be shortly after the next Bank of England decision at the beginning of February. Until then, thank you very much. Goodbye.
Thank you.